Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. Until today, this week appeared to have been characterized by some optimism for the growth stocks in hopes of lower interest rates. Virtually all of the FANGs had put in sort of a decent showing by oozing higher, until today, that is, when it looks as if there has been a reappraisal of the outlook or investors are simply taking their profits. I don't know that anyone knows which. Until today, even the weaker of the FANGs seem to find a kind of a second gear and get into action on the upside. However, the stock market, as characterized by the Standard & Poor's 500, is refusing, so far, to give us a buy signal by breaking out over its super growth price. That's 3.5 times book. We are close. We are not there. And until it happens, or does not happen, I remain on the cautious side. Overall values are poor. And historically, both the Standard & Poor's and the NASDAQ are expended. This time might be different, as some are hoping, I suspect. But I would be careful about mortgaging the ranch to buy some of these stocks at this time. Anyway, before we take a close look at those FANGs and what's been going on, as always, I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Let's start off with Meta, which after, remember that lovely breakout on the Zuckerberg announcement, has just been hugging its LSG price. And even today, it still managed to hold up above that level. So unless or until we break, we're there. NVIDIA continues to ride its HB5 price. And I keep wondering if it wants to go to its HB6, which, as I reminded you, is a 23-year high, all-time high. Anyway, it remains there. And finally, hey, we got that balance sheet for Apple at last. And what do we see? Well, we see actually that there hasn't been a continuation of the downtrend of the balance sheet. It's kind of leveled out or even risen just a little bit, although the next quarter is going to be very interesting with that $90 billion of share buybacks. Anyway, the stock continues to ride happily on its HB6 price, and we'll watch it, but it seems that that's going to be the case for some time to come. Now, Microsoft, after that strong jump here on on the Chat GPT and its break into the AI field, even maybe doing a search engine, I don't know. But that enthusiasm has kind of waned in the past week. And I am still wondering whether my concerns about downside to the bubble price are good or not. Anyway, for now, it's holding. Now, Alphabet, after the Microsoft announcement, just went sideways. But this week, first on announcement of a share buyback, but on news that it was going to be applying its own AI to its search engine function and thereby greatly improving it, has seen the stock really leap forward. I must say I was not anticipating that, but now my next question is what happens at the mid-super growth price? Because after all, that was where it broke down on the way down. Amazon, again, I had been anticipating further weakness, but just this week, the stock has kind of got itself into a gear and looks as if it's heading back for its bubble price. If I own it, and I don't. Believe me, I would be very, very happy to sell it at the bubble price if it gets there. Tesla, after breaking down from its HB2 price, which is 12 times book, had a dead hit on its HB1, which is 9.5 times book, has been rising. I had been expecting with those earnings forecasts that the stock is going to head down to its bubble price. And for the past couple of weeks has been trading very, very uncertainly. Certainly the company has been sending out some very mixed messages on its pricing, hasn't it? Netflix had been rolling over quite nicely, and I had been anticipating that we were heading back to its MSG price, but for some reason only known to FANG investors, the stock has put on a nice little rally, which I find somewhat strange when I look at Disney and I see that sharp breakdown here due to weakness in its streaming service. So we have a couple of mixed messages here in the streaming business. So to sum things up, starting with the buy-hold camp, first and foremost, Meta had less than impressive action this week after its previous jump following those knock-it-out-of-the-park figures that Zuckerberg had promised. The stock more or less just hugged its low super growth price, that's 4.5 times book, all week. And it may well be heading for its mid-super growth price, which is 23% higher than today, and quite possibly as high as its bubble price, which would be 60% higher. But let's not get too far ahead of itself and watch to make sure that the low super growth price is able to hold. Second, NVIDIA continues to ride its HB5, that's 26 times book, where it's been holding nicely and could be heading back to its HB6 or 33 times book, its all-time high. The stock needs to hold above this level, but so far, so good. The company has joined the majority of the FANGs in buying back stock last year and continues to do so. Third, that new balance sheet for Apple has been uploaded and the shares are safe on the upside of its HB6 price or 33 times book. Apple's first quarter numbers were weak. We're down in every quarter except one, and that was beating analysts' estimates. To stay up at these rarefied valuation level, Apple needs to keep buying back stock, but that appears to be in the cards with another $90 billion of stock purchases rescheduled. Now, I had 3 uncertain stocks. Alphabet had promised to buy back $70 billion of stock and is hoping to establish itself as a major player in the AI market, and clearly this week investors bought their story. Last week, I observed that only about 3% of their total equity was affected by the buybacks, and the impact would not be as profound as, say, those Apple buybacks do for Apple. And there was not much enthusiasm. But this week made up for it as the stock raced to a new valuation high for the year. Well, the MSG price is coming up, and we will shortly see how the shares are going to cope with that level, 5.5 times book, after failing to hold there last year. Microsoft beat its sales and earnings expectations, and it looks very much as if its AI applications are industry leading. The Microsoft cloud powerhouse is swamping the efforts of both Google and Amazon. This week, however, this trading was not as clear and certain and optimistic as last week. Amazon had disappointed investors due to a reported slowing revenue growth for its Amazon Web Service. And the company is mired in single-digit sales growth coming off its weakest year for expansion in a quarter of a century. With those numbers in last week, I had fully expected the stock would head back to its mid-super growth price, 5.5 times book. Instead, it turned smartly about, and it is heading for its bubble price. Personally, if I owned the shares, I would cheerfully take my profits there. Finally, I have 2 sells on my FANG list. Looking at Tesla, after some weeks of indecisive trading around their HB2 price, or 12 times book, the stock let go and dropped 1 breakpoint, or 23%. Since that low, the shares have been oozing higher despite some very contradictory messages on pricing. I maintain that you are paying a lot for growth based on a wing and a prayer. But this week, until today, the market was happy to do so. Finally, Netflix management is trying to put a good spin on its growth outlook. Now, last week, the market was not buying their story. But this week showed a strong reversal of sentiment. To me, this was somewhat peculiar as Disney showed some weak numbers in their streaming business and turned tail and ran. I am maintaining my sell rating on Netflix as I expect the shares to test their mid-super growth price low. I will finish off by reminding you that unless and until the Standard & Poor's is able to break out over its super growth price of 3.5 times book, which is very near at hand, I would treat any exposure to the NASDAQ stocks with considerable caution. Also, please keep in mind that the NASDAQ 100 must confirm any breakout by the S&P. For now, this has been Ross Healy, the Chairman of Strategic Analysis Corporation and the Senior Portfolio Manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next Friday.